We have now gotten Nvidia's earnings release, and this has a direct impact on supermicrocomputer and the fundamentals beneath this business. So in today's video, I want to take a look at what exactly Nvidia announced and how it could have an effect on supermicrocomputer in the short term as well as the long term. But of course, before we get into all of that, if you do enjoy the video, make sure to go down below and drop a like and subscribe for more videos like this one. In the last month, supermicrocomputer has surged by over 37%. This is primarily driven by one deal exclusively. And this was a deal made between supermicrocomputer and Datavolt, and it's estimated at a value of around $20 billion. This was part of the deals brokered by Donald Trump between the United States and Saudi Arabia, consisting of a number of different companies, one of those obviously being supermicrocomputer, but there were also deals made between Nvidia as well as AMD and Saudi Arabia. And this comes at a very important time for supermicrocomputer because in their most recent earnings announcement, which is their Q3 2025 earnings, they produced some sales that were below expectations. Their net sales came in at $4.6 billion versus $5.68 billion in Q2 of 2025 and $3.85 billion in Q3 of 2024. They also are seeing some contraction around their margin. Gross margin came in at 9.6%. That is down from 15.5% a year ago and 11.8% just last quarter. And they are attributing a lot of these drops in metrics to customers delaying making platform decisions. Basically, what they're saying here is that customers were anticipating that Blackwell chips from Nvidia would come out at the start of 2025. However, with the production being delayed a little bit, that has caused some of the customers to actually hold off on putting orders in until these chips actually hit the market. So overall, this deal between the US and Saudi Arabia to basically allow these chip manufacturers as well as server manufacturers sell their products outside of the United States is a huge move in the right direction. We have obviously seen a lot of restrictions out of the president as well as previous administrations on what chips can be sent overseas. So to get the backing on this deal with Saudi Arabia is a huge move in the right direction for a lot of these companies and their potential growth over the years. And there's a potential that this deal could have an almost immediate effect on supermicrocomputer's bottom line numbers. And they definitely need it because their non-GAAP EPS last quarter came in at 31 cents. That is down from 66 cents in Q3 of 2024. And the reason this could have an almost immediate effect on their bottom line is because if customers delayed some of their orders, however, they still produce those products, they could just shift those orders to Saudi Arabia and actually fill them with that existing inventory. So that could be a potential catalyst for the stock heading into their Q4 earnings. However, what these companies truly need is the opening up of the rest of the world to be able to sell their products. This is especially true for supermicrocomputer and it's especially true for Nvidia because Nvidia incurred a $4.5 billion charge in the first quarter due to excessive inventory of their H20 chips. Basically, Nvidia can no longer sell these chips because they were specifically made to be sold in China, and that resulted in them having to get rid of these chips and incur this $4.5 billion charge. This quarter, they put up revenue of $44.1 billion. That was up 12% from the previous quarter and 69% from a year ago. What's interesting is if you add this 4.5 into that $44.1 billion, you would get around $48.6 billion, which would actually be up around 85% year over year. And what would have been so interesting about 85% growth year over year is that this would have been a re-acceleration of growth for their top line numbers because last quarter they grew their top line by 78% year over year. So 85% growth year over year would have been a move in the right direction. So overall, this trade war between the US and China is really having a drastic effect on the semiconductor space. This is especially condensing their margins. We talked about this with supermicrocomputer, their margin falling to around 9.6%. Nvidia has been hit in a massive way. Their margin is currently sitting around 61% for their non-GAAP gross margin. That is down from around 78% a year ago. Even if you add in this $4.5 $1.5 billion charge, their non-GAAP gross margin would have been sitting at 71%, still down year over year. And Nvidia is even including some of this weakness in their guidance for Q2, because right now for the second quarter, they're expecting revenue to come in at $45 billion. That includes a loss of around $8 billion of revenue due to the restrictions on these H20 chips. If they came in and actually we saw a reversion of these restrictions, that means their revenue would be closer to $53 billion, or an increase of 76% year over year. And again, that would likely spur on a lot of new growth for Supermicro as well, not only impacting their top and bottom line numbers, but also impacting their gross margin. And it almost seems like analysts right now are pricing this change into the stock in F26, because right now for F25, analysts are projecting $2.08 of EPS. That is down from $2.21 of EPS a year ago. Remember, there's only one quarter left in this fiscal year for Supermicro, and then they'll move into F26. So in F26, analysts right now are projecting that the company will put up $2.90 of EPS. Here's the thing, in the short term, the deal that they made with Saudi Arabia could help these current year numbers. We could maybe see Supermicro come in and actually beat this full year guidance for F25. However, for 2026, for them to hit this $2.90, we need to see a change in policy from the US and how they actually approach the sale of these chips and related products outside of the United States. So in my opinion, with these earnings estimates being a little bit on the higher side, the forward P ratio is also factoring that in, because right now the forward P ratio, again based off these numbers for F26, is sitting at a 14.04. I honestly think that their lower end numbers are probably a little bit more realistic. That is an EPS of $2.37. That would mean that the stock is currently trading at an 18.35 PE ratio. I think that Supermicro should easily trade between a 15 and a 20 forward PE ratio. That would mean that the stock price could trade anywhere from $35 per share to $47 per share, basically putting the stock, which is currently trading at $43.50, at a fair valuation currently. However, where Supermicro really gets interesting is when you consider a deal being reached between the US and China. If that were to happen, I think their earnings could easily be in line with what analysts are expecting, that $2.90. And I wouldn't be surprised, again, depending on how severe the deal is and how much pent-up demand there is in China, we could potentially even see EPS in that $3.35 range. That could result in some very interesting price targets, because on the low end, the stock price would be in line with the current share price. However, on the high end, we could see Supermicro stock price soar all the way up to around $67 per share. And honestly, in the short term, we could see an even larger move up from Supermicro, because right now there is about a 20% short interest in this company. And if we see the stock move up in a meaningful way, especially due to a catalyst like earnings, we could potentially see a squeeze on that short interest that could result in some additional buying of the company. But keep in mind, I do own shares of Supermicro. This is the YouTube portfolio. It's currently sitting at a value of $64,617.67. And Supermicro is my second largest position. I hold 240 shares of the stock, and the market value of this position is sitting at around $10,500, up from my cost basis of $7,500. And I'm up around 40% on this position. If we were to see Supermicro run up to around $60 per share, I would likely sell out of most, if not all, of my position. I think around $60, especially in the short term, that is an overvalued stock in my opinion for Supermicro. I think the fair value right now is sitting at around $40 per share. So it's a little bit on the higher side, currently sitting at $43.50 or so. If we see Supermicro get some positive catalysts into their next earnings announcement, I think that the stock could move up to around $50 to maybe even $55 per share. But if it gets to that $60 range, I think that's a price that is a decent exit point for me personally. But other than Supermicro, I hold Google, Microsoft, AMD, Adobe, SoFi, PayPal, Alibaba, Palantir, Abercrombie & Fitch, Apple, and Hawkins. If you've been following the portfolio recently, what I've been looking to do is get into some smaller cap companies. That is why I added Abercrombie & Fitch and Hawkins. And there's another company that I'm likely to add here in the near future. If you haven't checked out my recent videos around small cap companies that I'm looking at in June, go back and check that one out, as well as check out my previous small cap video from around 2 weeks ago. I talk about some of these positions more in depth, as well as other small cap companies that I'm looking at potentially adding to the portfolio. With all of that said, I'd love to hear your thoughts in the comment section down below. Let me know, what is your price target for super microcomputer over the next year? Thank you guys so much for watching. Keep in mind, don't buy a company just because some random guy on YouTube talked about it. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. Thank you guys again for watching the video. If you did enjoy, drop a like down below and subscribe for more videos like this one. And as always, have a wonderful rest of your day.